Got some PMIs this morning, now some ISMs. Let's get back to Rick Santelli. Rick?
Yes, we have lots of data populating here. Let's look at factory orders, shall we? Factory orders up 1.2%. That is multiples of what we were expecting. That's the best since June when it was up 2.3. And in between, we had minus 2.1. So quite a comeback, one might say, averaging out some of those months. Ex-transportation, 1.4. That's the best since March of 22. And if you look at durable good orders, these are the final reads, Carl. We take the mid-month reads out. Mid-month read at 0.2 now becomes 0.1. Ex-transportation remains up 0.4. If you look at good orders, non-defense ex-air, a proxy for capital spending, it remains a juicy up 0.9. And finally, shipments remain at up 0.7. Now, here's the big numbers. ISM services on the PMIs, 53.6 on the services index. 53.6 actually is the weakest since July when it was 52.7, because in between we had a very solid 54.5. But that's all pretty good because every month this year was above 50. We haven't been below 50 in contraction mode since December of last year. If we look at the prices paid component, 58.9, which equals our last look, and it's unfortunate because both those numbers are the highest since April. We've had numbers in the 54s in between, so we rather see, obviously, prices paid remain more tame. On the services employment front, 53.4. Well, that actually is the weakest since 50.7. That was in July because we had another solid month in August. And finally, on the new orders front, 51.8, and 51.8 is on the weak side. We have to go back to the end of last year to find a weaker number, and that number happened to have been under 50. We see interest rates remain lower on the session, but much higher on the week. Sarah, back to you.